millions worth of more S&P 500 call prints, a potential executive order that could unlock $9 trillion worth of retirement funds into crypto, and zero data expiration S&P 500 option volumes hit their highest level in history. All that and much more in today's video. Make sure to like and subscribe below. Let's get started. So pretty incredible. Zero data expiration options are now over 60% of total S&P 500 options volume. So this is incredible, first of all, but also part of this is due to hedging. I have to say that, but we've also seen a rise of retail trading these consistently year over year. And this is a good comment, actually. I remember this. Don't fall for this. This is how they take your money. Very true. Most retail traders do not know or have a model to successfully trade zero data expiration options. I personally stay away from it. I think it's way too volatile for such a short time period. A lot can happen in a short time period. So I don't trade it. I recommend you don't trade it as well. Maybe there's some cases where it makes sense. Regardless, this is crazy to see how much it has risen ever since they started the everyday zero day expiration options. So consistent trend to the upside. Also, one more thing I want to mention over here before I go over to S&P 500 flow, you can see investor sentiment is basically even right now. So it's about 39.3% to 39%. And this is happening at all-time highs. So there's kind of a crossroad in sentiment right now. People don't know what direction they're looking towards, no extreme in either end. So that can leave a lot of upside or potential downside in the market. Regardless, I'll get into that here in a second. I'll go to the chart, but first I'm going to go to the dark pool and flow. So you can see over here, we had two notable prints from last week. One was this 2.7 billion in premium. This was actually a singular dark pool prints that made up this premium despite there being 27 of them. And then a little bit lower was a signature dark pool print. Remember, those are delayed by 24 hours on a European exchange. This is 2.4 billion worth, also 27 orders made up that. And then here's 624.28. So these are the two levels I'm interested in for this week. And I'll go over the chart in a second, but I do want to mention with this singular print, 2.7 billion, if we go to SPY's flow actually from Friday, you can see it on the side over here, some large singular prints at that level, the 631 million in premium, 219 million in premium here. You can see another 219 million in premium and a little bit more around that level. This is due to OPEX that was on Friday. So typically part of rebalancing is you see these large singular dark pool prints on the option expiration day. So this isn't anything out of the ordinary. However, the level still will remain as a support/resistance, which is why I want to go over to the chart and show you that really quickly. So funny enough, if you notice, the S&P 500 actually closed exactly at 627.59. So that order was executed end of day, a little bit after close at that closing price. And first I want to mention over here, these are the two paths that I talked about in last week's Sunday video. If you remember that, we had the 618.01 level, which actually got retested on Wednesday of last week. And then over here, the 610.72 level. And we knew that either would bounce off the 618 or would go down to this larger demand zone over here and bounce from there. Decided to bounce off the first support. So we did have a nice continuation higher. Now we are above 626.90, which is a new pivot level of mine, as well as the new level that we now have and now know from this past week. I'll draw it over here, that 627.59 on the chart. So got to optimize it a bit more over here. Kind of hard to make it perfect without typing in the exact level, but here we are, 627.59. We know that. And then the other one was in the 624 level. So bulls want to stay above both of these because we know they're notable prints from the previous week. That can be a good sign, at least confirmation bias wise, that they are continuing to buy market as it continues to go a lot higher. Surprisingly, there are funds that buy at all-time highs. There's actually good data to support buying after a new all-time high is reached, just because typically once it's up at that level, you see a slow grind higher thereafter. At least that's what we've seen in previous points in history. So it's possible they're continuing to buy as this appreciates. Also, we did see based on the flow that there was quite a bit of green on Friday over here for SPX call flow as well as put sells. Now, one caveat with this, of course, when you look at it face value, especially with flow in general, when you look at flow face value, it doesn't really paint the entire picture without context. Part of this is due to OPEX. So this 87.7 million in premium for the 6,000 call, this is most likely a roll to the next quarterly expiration for that September strike, as you can see over here. Similar thing for the December end of year expiration. Typically, whenever you see those quarterly expirations on OPEX, they are rebalancing of positions for that quarter or just rolls. So this isn't necessarily the most directional. However, definitely good to see a lot of green on here, especially when we saw a lot of green consistently throughout the week. Like if I go to SPY flow, for example, throughout all of last week, we can see the 14th to the 18th, There's actually a decent amount of call flow that we saw, 1.1 million in premium over here. This is a pretty aggressive bet since they chose the 640 strike when SPY is trading at 628 for the August expiration. So this is going to be one that I'll want to follow closely. As we go down over here, there was a put. This one was in the money. Call over here that was deep in the money. Another put over here. This one's for that August expiration. As we scroll down over here, there were a couple other for that August expiration, like another 1.1 million premium, also for that 640 strike. And as we scroll down, show you another one over here, a put sell for this 885. And there's a big one on QQQ, if you remember from last week. And I'll show you that really quickly, but this 5.6 million in premium for the 580 strike. So this is the most unusual out of all between SPY put and call flow and QQQ put and call flow from last week. This 5.6 million premium, highly unusual. That's why it's highlighted here on Cheddar Flow in blue for the 829 expiration. This one, pretty uncommon that you see this far out the money going into the end of the summer. And of course, this was bought to open because the size of the order, the volume is over the existing open interest. And we could even check over here to make sure of that. You can see all of these were bought at the ask and a huge volume spike for that day. Contract volume to the open interest was exceeding that open interest over here. So that's when you know it's buying directional in nature. Always a great sign to see. And I'll follow this order very closely next week as well. We'll just watch the open interest to see if there's any changes. So a lot of bullish positioning. There's still some of those puts, of course. If I go back to SPY, we have the 6.4 million in premium giant order for the 595 strikes. This is out the money. This one also expires in November. We've seen, especially between the last couple weeks, further dated puts like November and especially December in the S&P 500. And this is likely hedging going into earnings season, going into the fall or latter half of summer, rather, where typically there's some type of seasonal dip or seasonal weakness in the market. So this is likely a hedge. If we were to see a bunch of these in a row come in, then potentially there's some issue there, but it's just a singular print in this case. And consistently, we've been seeing way more calls than puts across the board all of last week. So just wanted to mention that. Also want to mention an update at least on coin, because this one's been ripping lately and Bitcoin is potentially going to rip quite a bit as well. And I'll show you the chart in a second. But first I want to show you this coin flow from last week. Just crazy. 69.7% call flow to 30% put flow. And you can see a bunch of green over here. Some pretty aggressive bets. Like if I scroll up here, you can see all these 725 weekly contracts that were bought over here for calls. These were in the money, of course, but still consistent amount. Love to see continuous prints because they are helpful for that directional nature. Over here in the money call, but still 1.1 million in premium for the 390 strike. And as I can scroll down again, you can see a bunch of green across the board. 1.7 million in premium for the 397.5 strike. And this was when it was trading 398. Now I think it closed at like 418 or something on Friday. So a lot of bullish positioning across the board. Same thing, by the way, with MSTR, the Bitcoin holdings, Sailors Bitcoin holding. You see over here, ton of bullish block prints over here, 2.8 million in premium, 1.8 million in premium, etc. And these are all out the money as well for very short date expiration. Expires literally this Friday. So a lot of bullish positioning into Bitcoin and just crypto related products. And I'll go over to the chart to show you what I'm looking at there. So Bitcoin is still priming for continuation to this giant inverse head and shoulder breakout. This is a beautiful chart, guys. Even I don't typically trade crypto, as you guys know, but whenever I see an amazing technical setup, I'm always going to trade it based on it. You guys know that I've been very interested in this for the past month to 2 months now, if you've been watching these videos. So this one is amid its giant breakout right now. And I believe we are on the cusp of an additional upside leg to around 140,000. I have a variety of reasons for that, but just to simplify it, look at something as basic as this coin ratio. It is almost exact same replica of the chart that Bitcoin has, except it's a bit forward leaning in this case. So we can put them together starting at the beginning of the year. And you can see over here, coin decided to break out of its inverse head and shoulder, same inverse head and shoulder that Bitcoin has, and just decided to break out a couple weeks early and had a nice continuation move and is much higher right now compared to Bitcoin, which is consolidating kind of like it did either up here, or you could even pull it back a bit farther. But over here, we can use more conservatively before a breakout move. Believe that breakout move is coming. And expected upside, in my opinion, would be 140,000. That's where I have my next resistances, as well as this ratio working perfectly. So very bullish on Bitcoin, as well as all of crypto right now. Really like Ethereum, have for a while. You can see this is just ripping to the skies at 3,800 right now at the time of me recording this. So huge breakout, by the way. so far. We'll see if it closes later on the weekly chart, but huge breakout of this downtrend. As long as it can stay over, we can see a new all-time high soon after. So it'd be about 5,000 at that point. Not sure if it wants to pull back just a little bit first before ripping, but this one's really strong, kind of a runaway train as of lately. So can't say anything else about crypto. Love all of it right now and have for the past couple of weeks. Again, last thing here with coin, a giant breakout of both inverse head and shoulder, similar to what Bitcoin and Ethereum have, as well as a much larger bull flag. We have the flag here, or at least the flag right there, and then the flag pull, and then a giant breakout, kind of what we're witnessing just on a lagging basis for Bitcoin and Ethereum right now. So a lot of opportunity across the market, both equities and crypto. Regardless, as always, appreciate you guys watching this video. I'll see you next time.